Hey, it's Richard with Matthews Wealth Management, doing February 2024 asset class performance. Got a very short memory card here. I didn't bring my drive, so I got to go very fast. All right, so end of February, we're going to look at NASDAQ first, up 8.57% in 2 months. So yeah, let's keep that going. That would be great. Just pretty much continuously up. A lot of NVIDIA, Meta, all the fun stuff, right? So jumping to S&P, instead of 8, it's 7.6. So stocks in general having a great year. Things are up, right? So good news there. However, when we get into Dow Jones Moderate Index, now we're throwing in some bonds, 2.2. So if you haven't put it 2 and 2 together, that means that bonds are negative and are dragging down a moderate index, which, yeah, par for the course. That's how it goes. All right, so let's see specifically in these equities, what's doing what. Now that it's February that we're reviewing, we can throw in a year-to-date number that's going to be different than the month of February. So for the month of February, 2.566, right? So large caps seem to be doing pretty well. 2.7, 5.78. Wow, that's the best. 8% in mid-cap growth, then 1.24 and 7.25. Okay, everything's up, right, for February. February, good month. Earnings were coming out, right? And when you inflate dollars, earnings should go up. Yeah. All right, so year-to-date, 3.5, 8, and 10. 1, 3, and 8. Our only negative for the year-to-date is small cap value. And then we see a +2 and a +3. So small cap still not really doing that great for the year. Although, if you annualize 2 months at 3, I mean, you're talking close to 20%. So, yeah, everything's great, right? All right. So let's dive into international. International had a positive month, so basically 2 in a row. We're at 2.44, not very much. Emerging markets dug out of their hole, almost. And then we get into the bonds. A lot of red. Yeah, a lot of red on the bonds. So, is the Fed going to cut rates? No, it doesn't look like they will, because there's still some persistent inflation, and we've still got really low unemployment. Okay, so this idea that bonds will be, the prices on rates will drop and prices of bonds will go up, not yet. That's what's happening. Okay, so short terms, another negative, but hey, it's back to a little positive there. High yields were 0 last time, and then everything else is pretty much how it should be, right? Like, so a -1, that brought them into the negative. -2 brought them -4. Tips got brought negative by this last month. So just in general, it's the, we're not going to cut rates yet. That's what's happening. And because of that, where are you going to put your money? Back into the equity market. Great, big surprise. All right, commodities, oil's just continuing to go up. So pay attention to gas prices, it's coming. Also noticed that they either put something in a law that has not yet passed, where a reserve of gasoline up in the Northeast is going to not only be depleted, but also eliminated and shut down, because apparently we don't need gasoline reserves because green energy, all that good stuff. Gold continues to be down for February. We're at all-time highs right now, but February it was down again. So real estate came up, which brought them halfway out, or a third of the way out from the hole. And then, oh my gosh, y'all, this currency is just so volatile, right? And that's weird, right? That gold and Bitcoin would be opposites, and that's not the case for March. But wow, 42% in 1 month. Cool. Should have been in it. All right. So year to date, let's just look how everything's doing. And this is year to date, not as of today, like I did on the first couple of slides, but year to date as of the end of February. NASDAQ up 8.79, S&P 7.45. That moderate is not 2.22, but 1.29. And here we are beating a moderate risk, which is fine. I mean, we're always kind of in that, right? So I don't want to compare us to this, because that would be, frankly, irresponsible. But compared to kind of what a mix of asset classes looks like, we're happy-ish. I think we're really well positioned going forward in the bond market. And I'm going to do the balance sheet and M2 money supply, as well as another thing about how are the banks doing. And that'll be an interesting video, so check back, look at that video. But asset classes and the performance for February. See you next time.